What a whirlwind the last 24 hours have been in the global markets. It's really been a tale of three cities. On one side, we've got this record-shattering, pure euphoric rally on Wall Street. On the other, a total surprise policy shock coming out of Tokyo. And then, smack in the middle of it all, a tech alliance that just redrew the entire map for the semiconductor industry. So what's the real story here?
So, how do we make sense of all this? In this breakdown, we're going to look at these three really powerful competing forces that are pulling the market in completely different directions right now. We've got the pure joy of a bull run, that sudden jolt of central bank caution, and then this deep, long-term transformation that's happening at the corporate level.
Okay, so here's our game plan. We're going to kick things off with that historic rally in the US, and then we'll pivot to that surprise announcement from Tokyo. From there, we'll dive into the massive tech deal shaking up the chip industry, take a look at the geopolitical events on the horizon, and finally, we'll pinpoint exactly what we should be watching for next.
All right, let's start with the clearest signal of the day, an absolutely unambiguous and powerful surge of optimism coming straight out of the US markets.
For the first time since November of 2021, all four major US benchmarks hit record highs, all at the same time. We're talking the S&P 500, the NASDAQ, the Dow Jones, and the Russell 2000. Now, what's really wild about this is just how rare it is. This has only happened 25 times this entire century. That just goes to show you the sheer breadth of this rally.
And this reflects a huge shift in mood. The CNN Fear and Greed Index is now flashing extreme greed. So why the sudden confidence? Well, it seems investors believe the Fed isn't cutting rates to save a weak economy. No, they think the economy is strong enough to finally start normalizing policy. And that idea, backed by solid economic data, is basically pure rocket fuel for this rally.
But just as the party was really getting started on Wall Street, a completely different signal came out of Tokyo, injecting a major dose of tension and caution into the whole global story. So, while the Bank of Japan, or the BOJ, kept its main policy rate on hold, it dropped an absolute bombshell. It's going to start selling its massive holdings of stock exchange-traded funds, or ETFs. After a decade of just unprecedented stimulus, this is really the first major step back toward normal.
And the scale here is just mind-boggling. At today's market value, the BOJ's holdings are worth around 70 trillion yen. That's nearly $500 billion US. This mountain of assets was built up over a decade, making the central bank one of the biggest single players in the entire Japanese stock market.
But the initial shock was pretty quickly softened by the details. The BOJ's selling pace is incredibly slow, just about 0.05% of the market's daily volume. To put that in perspective, Governor Ueda himself said that at this rate, it would take over a century to unwind the whole position. That little detail definitely helped calm some of the initial market freakout.
But there was another surprise, kind of hidden in the meeting minutes. 2 of the 9 board members actually voted for an immediate rate hike. Now, they were outvoted, but it's a really clear hawkish signal. It means there's growing pressure inside the bank to raise interest rates and tighten policy way more aggressively than the market expects.
And the market's reaction was swift, and it made perfect sense. The Nikkei stock index initially plunged over 800 points. Right? Because people are thinking about all this future selling pressure from the central bank. At the exact same time, the Japanese yen strengthened against the dollar as traders started pricing in the growing chance of future rate hikes. Okay, so let's shift gears from the big macro story to an industry-defining micro story. This one perfectly captures those transformative corporate forces that are also driving the market. A shocking alliance between 2 longtime rivals.
NVIDIA's CEO Jensen Huang framed this deal in some pretty epic terms, highlighting the massive market they think this new partnership can unlock. This isn't just some small collaboration, it's a serious bid to reshape a $50 billion corner of the tech world.
And here it is, the headline number that sent absolute shockwaves through the industry. NVIDIA, the dominant force in AI chips, is making a massive $5 billion investment into its longtime rival, Intel. This is a move that I think almost no one saw coming.
The market delivered its verdict immediately. Intel stock had its biggest one-day jump in nearly 40 years, surging 22%. Meanwhile, their key competitor, AMD, fell 5% as investors scrambled to figure out who gets pushed aside. NVIDIA itself rose a modest 3%. The market clearly saw this as a strategic win, but an even bigger lifeline for Intel.
So, what's the strategy here? Why would these rivals suddenly partner up? Well, for Intel, it's a critical lifeline into NVIDIA's dominant AI ecosystem.
For NVIDIA, it's all about getting access to Intel's x86 architecture, the basic language of most personal computers, which massively expands its reach. This wasn't a reaction to government initiatives either. The deal was apparently in the works for a year, making it a pure corporate power play.
Now, we need to broaden our scope a little bit, because none of these market moves happen in a vacuum. There's a major geopolitical event scheduled for today that could impact everything from trade to technology.
At 9 a.m. Eastern Time, US President Trump and Chinese President Xi are scheduled to have a really high-stakes phone call. On the agenda are a bunch of critical items: finalizing a deal for TikTok's US operations, extending the current trade truce, and talking about sensitive issues like tariffs, agricultural buys, and the sale of advanced chips, including those made by NVIDIA, to China. The outcome of this call could really set the tone for global markets.
So with all of this going on, what should we be watching for next? Well, based on data from investing.com, the economic calendar for the rest of the day is packed with key events that could easily sway the markets.
We've already had UK retail sales giving us a pulse check on the British consumer. Next up, we'll hear from ECB President Lagarde for clues on Europe's policy direction. But really, the main event is at 2:30 p.m. Eastern, when we'll hear from Mary Daly of the Federal Open Market Committee, or FOMC. That's the group that votes on interest rates. Her comments will be the first real chance to see how the Fed is thinking after the recent rate cut and today's massive rally.
So that leaves us with the central question of the day, doesn't it? We have these incredibly powerful yet totally contradictory signals. The bulls are just running wild on Wall Street, fueled by pure optimism. And at the exact same time, these hawkish signals are emerging from one of the world's most important central banks in Tokyo. It really makes us wonder, which force is ultimately going to win out and set the direction for global markets? Thanks for watching. Don't forget to like and subscribe.